Thank you very much, and I apologise, I'm not a mining engineer. I know the concept here is talk about safety and safe workplaces, but I think, as a bit of context, we've tackled safety head-on for a number of decades, and the topic of the conversation has been about safety and safe workplaces, and I think you can only get so far with that. We've put so many rules and regulations in place. We've got regulations at a federal level, at a state level, and every company has got them. People are now at the point where there are so many procedures, systems and tools in businesses, you actually don't know about them all, and you can't understand them all, and they're very complex. So in my opinion, the next step that the industry needs to take is to move away from the compliance and understand people. Understand what actually drives and motivates people to do good things in the workplace. And that's not a safety conversation. That's about what motivates people. It's about leadership, it's about skills and capabilities of leadership, and it's about why they come to work, about what motivates them, what rewards them, how they think about success, and how they think about building their careers. So I'm purposely not going to talk about safety on every one of my slides, because I think safety is an outcome of how people are feeling, how leadership leads, and how much motivation and incentivisation you actually put in the workplace for people to aspire to. So, for those who don't know Oz Minerals, and there may be some people here, Oz Minerals is an ASX listed company, and I'm going to use the company as an example, if you like, through the next 45 minutes or so, to talk more about my philosophies, if you like, and use the company as an example as to what we're doing and how we're doing it. So Oz Minerals currently, market cap, depends on what day you look at, it's pretty volatile, and I'll come back to that in a minute. Market cap's $2 billion, plus or minus. A year ago it was $1 billion. 18 months ago we were at $800 million. So we are building the company, and I want to talk a bit about what it is we're doing that actually is aligning people and motivating people to do good things in the organisation. And I'm going to come back to that people topic through every facet of this. When we talk about cost, when we talk about value, when we talk about controls, when we talk about safety, it's all going to come back to the people element of this. We've got open pit operation up at Prominent Hill, so in central South Australia. We've got that's an underground operation at Prominent Hill. They both produce copper gold concentrate, and those concentrates are sold to smelters around the world. So we sell into Europe, into Asia, and into Australia to a whole raft of different smelting companies. We've got a new project in Carrapateena in South Australia. So this is at a PFS level. It's a large copper gold resource, 800 million tonnes at about 0.8% copper. And we're now going through the process to work out how we're going to construct this mine. At the end of this month, we've got our official opening for the decline, which we're starting. We've got the Premier coming up to site to ceremoniously dig the first piece of dirt and demonstrate that he's helping create jobs in South Australia, because he has been actually quite instrumental in helping remove roadblocks for us as we progress. One of the few resource companies in today's sector that does not have any debt. So we've got $500 million of cash in the bank and no debt. And the margin that we make on our products is now about 45 to 50%. And that's something that we've constructed over the past couple of years. We'll talk a little bit about how we've done that. So let me talk about strategy. I want to spend a little bit of time on this. So a lot of people talk about strategy, and every company has got a strategy. And I suspect many people, individuals, have strategies about what they're going to do, what they're going to do with their lives, their careers, etc. I think the reality is strategy is actually pretty easy to construct. You'll debate around the edges what things you'll focus on and what you won't focus on. But most people in organisations and senior levels, I suspect, could write 80% of their strategy down in a couple of hours on a piece of paper, just by what they know of the organisation. That's not the challenge with strategy. The challenge with strategy is how do you get your organisation to understand it, how do you get them aligned with it, and how do you actually deliver on it. Most organisations struggle with the execution and the delivery piece. That's where organisations come unstuck. And what differentiates great organisations from good organisations is the execution piece. Is how do you get your organisation aligned? Do they like the strategy? Do they connect with that strategy? And do they actually execute on it? So how you build the strategy is really important. And I think too many organisations today will bring in a third-party organisation to come in and construct a strategy for them based on all the market data, etc. The problem with that process is your team doesn't own it. They get given it. And if you get given something, the chance that you will own it to your heart, to your head, is actually pretty low. You don't walk out physically believing every piece of it, believing the intent of it, and believing how it was actually constructed. So I absolutely believe you need external challenge when you're building a strategy. You need data, you need information, you need lots of inputs, but you cannot take the ownership away from the team who's actually building it. So when we built our strategy 18 months ago, we took our top 45, 50 people in the organisation, so the leaders, and we ran multiple workshops. And those workshops were, to start with, pretty confronting, because what we made them do was go out and collect data and said, go and tell us how your truck fleet is performing in that mine compared to all the mines around the world. And it's pretty easy to do. You can do it on benchmark, and you can get agencies to do that. We asked our investor relations team to go and tell us what market guidance have we given to the market for the past 5 years, and did we actually deliver against that guidance? And plot it up. And it's black and white, it's factual, it's data. And in that process, a lot of people actually discover lots of very interesting things. They discover fairly simple things, but things they didn't actually understand or know about themselves. So in the process of building the strategy, you build capability, you build understanding, and you build skills. So when we got to the end of 4 months, and it took us 4 months to build our strategy, we had a leadership team that had been on a journey, pretty confronting journey up front to see what we actually did do and didn't do as a company, what we were doing well and not doing well, and what they actually needed to do to make the company successful. So when I go out to the company now, I know our leadership team understand the strategy. And I know when they make decisions, they're making decisions aligned with the strategic intent. So what they see now, when they're cutting costs in a particular part of the business, they don't necessarily see us cutting costs for cutting costs' sake. They see us producing more cash so we can build another mine. And it's really important when you differentiate the context. If you tell people you've got to cut costs, it's about the most unexciting thing you can do in a business. It's very demotivating. What you want people to do is to recognise that by creating more cash today gives you an opportunity to do something else. And if we build another mine, that allows you a career opportunity to go from one job to another job. And you've got to build those linkages for people. So putting that context into your strategy is really important. So at the end of the 4 months, we ended up with a fairly detailed strategy, and we had a whole raft of actions underneath, which the leadership team took away and have been executing. And over the last 18 months, they've effectively, systematically been executing on the plans they put underneath that strategy. One of them is safety, and I'll talk about that a little bit further on. So as I said right from the very beginning, safety is an outcome. So I think most companies put slides like this up and they'll show their TRIFR rates, and they'll show how many people they're hurting and frequency rates and how many fatalities they have had or aren't having, etc. You don't very often hear people talk about what this chart actually means. So what it actually means is people going to hospital, usually. So it usually means, you can work out the numbers depending on how many people you've got. It usually means 2 people, 3 people, 4 people a month off to hospital. That's what it typically means. When you put some context like that in place for people, and the people understand this is actually about people, it's not a stat or something like that, it changes their mindset. These people don't try and get hurt. They don't come to work saying, I'm going to get hurt today. They don't come to work thinking about what could hurt me today. They come to work expecting to go home at the end of the day in the same way they came to work. So the question is, why do they get hurt? And I think it's a very complex question with lots of complex answers, but I think there's one thing that actually changes whether people get hurt or not, and that's leadership. That's the only thing that determines who you hire, whether you hire the right people, whether you accept the systems, what systems you put in place, what tools you put in place, whether you walk past something or not. All of that comes down to the quality of leadership. If you get the right leaders who understand the context and where they're going, that will decide whether you have safe outcomes or not. And I don't look at this as a safety chart, I look at it as a leading indicator for business performance. Because if you get safety right, you'll get more tonnes, your costs will be lower, you'll get better productivity rates, because it's an indicator of how capable your leadership team is and how focused people are on their jobs. And if the leaders are very capable and care about people, and the people are focusing on their jobs, this chart will actually improve naturally, and you'll see your costs come down, you'll see your productivity rates go up. So it's actually a leading indicator for a whole raft of business things. And if you get people to think about it that way, it actually drives different behaviour, because they're not trying to police people following procedures in the workplace. They're thinking about enabling them to actually demonstrate or deliver business outcomes. So it's a different mindset. I was told I had to put this in here to actually talk a bit about where I've come from. So I'm not going to go through this a lot, but one of the things you see this sort of culture play out in different places in very different ways. So as an example, when I worked in Madagascar for a couple of years at a mineral sands mining operation in Madagascar. So Madagascar it's a very basic society in the areas that we were working, basically cultivating their own living. Most of them, their only jobs they've ever had is working in their own community effectively, and that's where our workforce came from Madagascar. And Madagascar was the only operation that we didn't have any injuries for 3 years. And it's interesting when you sort of reflect on that, because these people, very nice people, but they're not educated people. So what that drove was we had to make our systems allow for people who, many of them, can't read and write. So how do you actually do that? And what the answer was, you get rid of it all. So you've actually got to make it really simple for people. And if you make it really simple, they're only going to remember a few things. And if you only have to remember a few things, you'll do it really well. And we've done exactly the opposite in most first world countries. You actually make it more complex, so people can't remember everything. I'm not going to go through it. They're all the places that have either lived or spent a fair bit of time working. And each of these cultures are different. So understanding the culture is really important to the type of strategy you put in place and the type of leaders you actually bring in to lead your organisation. This is a frustrating topic for me. Every one of us, I suspect, here will have probably had 5 or 10 emails today and a few text messages telling us what the exchange rate's doing, what prices are doing, and what happened yesterday in the market, what China's going to do tomorrow. And then the entire investment community around it responds to that data set. And they decide what they're going to do for their investment horizon. They pull money out of the market, they put money back in, and they move it from one commodity to another. That's the reality of what's driving many of our markets today. And one of the challenges that we have in industries where you're investing billions of dollars, and most of our big industries are like this, you invest $1 billion, that's certainly what we're looking for at Carrapateena. So we're looking to invest $1 billion that's got a mine life of 20 plus years, and our first product doesn't even come for 3 years. And yet the market reacts to a world that is published on our email and phone about what happened yesterday and what's going to happen today. And that's the market environment. It's getting increasingly short term. So when you talk to people now, they're wanting more information, they want more detailed information, more data, and are increasingly, I think, losing sight of the horizons you actually need to have to make decisions like this. And a lot of companies, I see, responding to that short term. So a lot of companies will listen to the people who are saying, it's really short term, you shouldn't do this, the price is bad today, so don't make that investment decision. And some people are saying, okay. As opposed to saying, no, we've got a strategy, this is our company's strategy, if you don't agree with it, sell stock. Because there are investors out there that like the strategy, they like the long term, but you've got to get your shareholder base aligned to your strategy. If you start manipulating your strategy in response to short-term and long-term, there is only one outcome, and it's implosion. You will destroy the company. So with organisations like this, and I'm finding it every day, I spent all day today with investors, some current, some past, some future, and I'm doing the same tomorrow. With all organisations, every time you make a decision, especially when it involves an investment related to exchange rate or price of a commodity, you almost by default will split your shareholder base or split the analyst base. We use consensus pricing. So we say, we don't know what the answer for copper price is for the next 20 years, so we're going to take all of your estimates and we're going to average it. That's the number we're going to use. So by default, half are happy and half are unhappy. So how do you respond to that? It's one of the challenges we deal with. I think the answer here is about having a robust strategy and following your strategy. Don't change it. If you start manipulating your strategy, you will destroy the company. And this is just a data set that sort of shows that. The average mine life is 10, 15, 20, 30 years. So you can't take spot price or spot exchange or what China's doing in its policy this week. You can't take that information and apply it to an investment decision that spans 30 years. You've got to have a much longer term horizon when you actually make those decisions. It takes a fair bit of courage to stand up in front of a bunch of investors who are all saying you shouldn't do this and say, no, we are doing this and here's why. But a lot of people sort of shy away from that and they say, maybe we shouldn't actually do it. And you start to see backpedaling. And you do see a lot of companies actually going through that process, even today, responding to pretty short-term sentiment in marketplaces. So some of the things you've got to focus on. I think you've got to focus on the fundamentals. If you're looking at a 30-year investment horizon, in a way it's a gamble because there are so many macro environments that can affect that business decision. You're reliant on exchange rate, you're reliant on the price of a commodity, you're reliant on what the policy in China is going to be in its next party, in its next 5-year plan. All of those things you don't know. It depends on whether there's going to be a war breakout somewhere. It depends on whether Trump's going to get elected, for example. All of these things are going to affect our share prices and whether your decision was right or wrong. I don't know how you predict what Trump's going to do if he gets in, or any of those other things. So how do you actually make an informed decision? At the beginning, you've just got to take a view. You've got to do as much homework as you possibly can. You've got to look at the fundamentals. So supply and demand, I'm sure you're all familiar with supply and demand. In the copper industry, the fundamentals are robust. And every commentator out there says long-term copper price will be $2.80 to $3. They all say the same thing. And yet you have some commentators saying, yes, but the spot price today is $2. So how can you build a mine? And that's the mindset. That's one of the challenges you actually face. When people, their own forecast will be very positive, but the short term's not there, so they can't get themselves over that mental anguish, if you like, of short-term pricing. The other thing that we know is building mines is getting harder and harder. So that's a chart that shows the lead time to actual production from resources once they're discovered. And we know this because legislation is getting harder. People need to be more cost focused, they need to be more community orientated, they need to think about what the stakeholders, permitting is getting harder and harder. So everything would tell you that with mine lives, with mine permitting periods getting longer and longer, you actually need a longer and longer term focus, not a shorter and shorter term focus. You've got to be thinking longer term than what you normally do. So how do you do that when the market's actually getting shorter and shorter? These are all the things that lead to markets cycling through ups and downs, because you'll see the sentiment change when people underinvest. When the sentiment changes, people will start to put money back in. One of the other fundamentals is just the market size. So I'm assuming some people here will know about lithium. Lithium's in the press every second day here, and any company who talks about lithium can raise a whole bucket of money. The reality is, one lithium mine satisfies the global market demand. So why on earth would everybody be putting money into lithium? But they do. It's very emotive. They get on a bandwagon and everybody follows. It doesn't satisfy any of the fundamentals. The market size for copper is almost as big as iron ore. So it's one of the biggest market sizes, which is important. You don't want to get into a market where one mine changes the dynamics. Get into a big market, you're actually much safer. So what drives copper demand? So copper demand is driven by new houses and China and things like that. But the other thing that's driving copper demand, which is why I like this commodity versus some others, is technology. So it's very hard to predict where technology is going, but copper is one of the key components to nearly all new technology that's being built because of its conductivity properties. So investing in a sector that you know is going to go places is probably pretty important as well. So that actually satisfies one of the 5 forces. Tesla cars, electric cars, they're all taking off. We don't know whether they're going to be around in 10, 20, 30 years, but I suspect it's more likely there'll be electric cars than diesel-generated cars or power-fueled cars. So the predictions are that electric vehicles will take off. So it's just another thing that gives you comfort in the long-term fundamentals of the copper industry in this case. So let me talk about quality. So lots of people talk about innovation, and you hear innovation all the time now, almost as if innovation is the answer to business problems. And I guess what I want to talk a bit about is, before you start to talk about innovation, because innovation will not fix a fundamental issue in your business. You've got to fix the fundamental issues first, then you talk about innovation. Then you can talk about how do you keep going, what else do you need to do, what do you need to reinvent or do better or do faster to help inspire people. So having good assets and focusing on the basics in your asset is really, really important, and it's really, really hard, because you need 1,000, 2,000, 5,000 people doing the same thing in the same day and the same direction. And that's pretty tough to do. Now again, it comes back to leadership. So in this case, for us, we're located in South Australia. One of the interesting things about South Australia is everybody outside South Australia has a different view of South Australia, which is interesting. Even South Australians have a different view about South Australia. But in the Gawler-Craton, I'm just going to talk about resources here, the copper resources in that belt have grades between 2 and 4%. So if you compare those types of grades to the global average copper grade for resources around the world, it's about 2 times the global average. If you compare it to Chile, which is probably one of the biggest copper producers in the world, it's about 4 times the average of the average copper grade in Chile. So if you go back to fundamentals, what is it that drives margin and what drives value, if you like? Usually grade. Grade's one of the big ones. Big porphyries can be incredibly valuable. So a 0.4, 0.5, 0.6% copper porphyry, for example, can be very valuable, but it can also be very sensitive. So even if you look at the big copper porphyries sitting in South America, Chile, for example, there's a couple there I can think of that run at about 1%, and while they're in open pit phase, not too bad, they actually produce quite cheap copper con. When they go underground, they get marginal, they don't work. So do you want to invest in an asset that is marginal in the down cycles and reaps good rewards in the up cycle, or do you want to invest in an asset that's good through both ups and down cycles? And I think it's obvious you want the latter. So you've got to make sure your strategy targets the latter. It's no good spending all your time looking at low-grade porphyry systems if your strategy is to be a high-margin, value-accretive sort of company that focuses on high-grade resources. So one of the reasons that we are working in this belt, and it's our primary focus, is because the resources you get in this belt are the highest grade, largest resources in the world. They're IOCG resources. That's typically where you find them. So let me talk about optionality. So this is a cross-section through Prominent Hill, and it shows the open pit and the resource and various drill holes into the resource under Prominent Hill. Optionality, I think, in business is so important because at any one time we build a set of business plans around a whole set of macro environmental things, and we make assumptions about them. We make assumptions about everyone, right down to how much is power price going to cost or diesel price going to cost. All of those things go into the pot and you come up with a mine plan. Having optionality in the business means you have to be able to respond to changing environments, not so much every day, but certainly weekly, monthly and quarterly. So building optionality into your business so that you can actually shift course, change path, is really important. But you can't do that unless you build those options in right from the very beginning and get people thinking that way. So too many times, and I've seen this a number of times, where people build one business plan in their business, they don't do sensitivity checking, but what if this happens or what if this happens? And when something happens, they've got nowhere to go, and it's all baked in. And one of the giveaway signs for me of that type of thinking is when they write service contracts, they write very fixed service contracts that have enormous fixed overhead costs on them, and the variable piece is just around their business plan. And the minute the world changes, you can't change your contract. And you see that a lot certainly in mining organisations. So cost. Cost is really important. It's not the only thing that's really important. But when we talk about cost, getting people to think about money and thinking about dollars and cents is actually pretty hard. It sounds simple, but it's actually really hard. Trying to get a guy who's driving an excavator all day to know what it costs him to drive that machine, how much it costs to actually dig dirt, to tram that machine, what it means for the business to actually damage a bucket, for example, and put it out for a week, that's really hard to do. But that's what you want. Because if he doesn't associate with what he's doing with an impact on the bigger organisation, then you've got a problem, because they'll be making decisions that are not informed from a cost perspective. So trying to get things into people's perspectives. So cost to me means a very different thing to the cost to an excavator operator or a truck operator or even a general manager at a site. But getting the context right for them so they understand what cost means for them and what the impacts are is very important. The further you get down the cost curve, of course, the better you are. So one of our company mantras is we only work in the bottom half of the cost curve. If we look at assets that are top half cost curve performance, we don't go there because they're too sensitive. You'll make money sometimes, but you won't make money other times. What that drives is organisations cutting into their business. And usually the first thing to go are things like business improvement, and innovation and all those discretionary teams that they have on the side to do special projects. They're normally the first thing that goes. And they go because they have assets that don't sit in the bottom half of the cost curve. So let me talk a bit about innovation. So this is a picture of Carrapateena. So the middle is the box cut that we're building at Carrapateena now. So this is the new mine we're constructing in central South Australia. So the Premier's going to stand down the bottom there and press the red button to blow the first blast on the portal, which I'm sure you'll be very happy about. So with our strategy, I showed you a picture of the Gawler Craton. The vision that we have for this is about 10 years out. So what we anticipate happening is there will be a string of mines up the centre of the Gawler Craton. These assets are there. We know some of them are there. They just need somebody to tackle them, grab them, develop them up into exploitable resources and connect them into a network. We've got 4 of them. We've already got 1 in production. We're moving on Carrapateena. We're now about to start focusing on a port. So by focusing on the port and and I'll talk about a secondary treatment process in a second, but by putting this at a port, we'll actually generate some competitive advantage to effectively control copper right through that belt. Because we're going to have the only technology that takes copper concentrate that's got uranium in it, and I'll come back to that in a minute, and make it a super concentrate, a very pure concentrate. To do that, it's going to take us 4 or 5 years. It's going to take some investment and a bit of R&D. But if you think about the end goal being we will have the cleanest copper concentrate in the world, and I suspect if you step forward 5 or 10 years, and you look at what Japan is doing, for example, Japan will not allow copper concentrates into the country if it's got any sort of contaminant in it, because they don't want to deal with contamination issues in the country. I think you can apply that template and put it on most other countries. The only question is when, how long away. China will get there. China's already starting to question, purity and quality of materials being imported into the country. Some areas they're going pretty hard on, some areas they're backing off on. What will decide how hard they go is the availability. It'll be the internal economics of whether things work or not. If there's techniques and technologies out here that can actually deliver clean concentrate, they will go there and they'll tighten up their borders. They'll tighten up the import parameters for their borders. It's only a matter of time. Europe is mostly there already. India's a fair way behind, but India will get there as well eventually. Australia's already starting to tighten up its borders. It's a natural evolution. So the question is, when do you start investing in anticipation of that? If you take a very short-term view, you won't start investing until you can't sell your concentrate. That's what will trigger it. The problem with this is it takes 3 to 5 years to build up the lead time to get the technology in place and the systems in place and the infrastructure in place to actually tackle it. So you've got to do it now. There's no point waiting for some point in the future, because if you wait for that point, your company will be in trouble. So flexibility, I want to talk a bit about flexibility. So I talked about optionality. Flexibility inside an organisation is critical, and I'll talk about agility in a minute. But having flexibility in resources, people quite often think about mineral resources as being quite inflexible. They're fixed and you put a mine plan around them and that's what you're going to do. But all resources have grade ton curves that go with them. They all have distributions of mineralisations, and most resources you can actually mine with different methods. They just have different parameters and different economic tensions in them and different risk profiles. So it depends what context you give your teams as to what solution they will give you. So in Carrapateena's case, so Carrapateena was bought by Oz Minerals in 2011, and the team were asked to build the highest value option that they could build for Carrapateena. So they went big, and they designed a block cave mine. It was going to cost $3 billion, but the NPV was $1.6 billion. So I think they did exactly what they were asked to do. They actually came up with a very value accretive project. However, the rate of return was 12%, and the technical risks associated with that project were pretty high. So a big question around, would it actually cave? So as an example, you could walk up to a drill core tube, drill core tray on site, you could pick up a piece of drill core from one end and it wouldn't break. For me, that's usually a giveaway. If this thing's not going to break in your hand, you've really got some technical questions here about whether it's going to cave. So we went back to the geologist and said, that's really nice. Now go away and tell me what the greatest return project is. And you actually get a completely different answer. So when you frame your questions to technical teams and talk about, this is what we're trying to achieve, that context is really important. When you actually look, we want a balance between risk both up and downside risk. We want a balance between rates of return and NPV and capital intensity. What does that look like? And it's a very different answer. So the project that we're building here at Carrapateena now is quite a bit smaller. It's only 80 million tonnes, so 10% of the total resource, but it's going to generate an IRR of 24% and an NPV of 800 million. Once you get your capital into it though, and you're actually into the resource, we've picked sub-level caving as a mining option. Sub-level caving will allow us to step out into that resource pretty straightforward and pretty simply. If we'd have picked sub-level open stoping as an example, that would have been a bit harder because of the cost of actually stoping and filling, etc. With sub-level caving as a mining technique, it actually allows us to flex with the economics. And because the resource is zoned, it's very high grade in the middle and it zones out, the ability to flex in and out is actually reasonably straightforward, notwithstanding you need to manage a cave, which is a separate question. But making sure your teams understand that sort of context is pretty important because it will change the answer completely. So communities. This is an area that some companies I think do actually quite well and some companies make an absolute disaster of it. And I think it depends on how you approach it. I've seen technical teams, and I think as technical people we have to be really careful in this space because technical people approach communities from a technical angle, and it's not a technical question, it's a social question. So when we think about communities, and I mean Aboriginal people and their traditional rights, the heritage and the way they connect to the land, I'm talking about pastoral station owners or the local town, all of those types of things, thinking about it from a community perspective, I would challenge technical people with, is actually quite hard. And you've got to think about it in a different way. Too many times when I see risk assessments done, and I saw it done for Carrapateena, the team sat down and did a risk assessment. Half the risk assessment was community. Threats from traditional owners, threats from pastoralists, threats from state government, etc., etc. For me, they should have been looking at it through their lens. They should not have been allowed to, and they're now not, to look at community and pastoralists and traditional owners as a threat. They've got to look at them as an opportunity. If you do an opportunity assessment, when you look at community and traditional owners and towns, etc., you come up with a different set of answers. Your actions are completely different. But I think probably more importantly, what changes is the action list, but what changes is the mindset of your team who goes out and talks to them. Because they actually think about it in a different way. They come out thinking this is a can-do, we're going to do this, and we can build, we can construct, there's benefits in all of this. That's how you get the win-win outcomes. If you do a risk assessment and say, how do you manage this threat? You will have teams going out into the field in a defensive type of mode, trying to come up with actions to keep people off your side. That's effectively where it ends up. And it will end up as a disaster. And you see lots of examples of disasters have been and in the making because people see them as threats, not opportunities. If you see it as an opportunity, there's some really fantastic things you can actually do. Because typically you'll have captive workforces, they are motivated, they'll be your biggest ambassadors if you treat them as an ambassador. Customers. So customers are pretty important in all of this, of course, because they're the people that pay our bills at the end of the day. One of the interesting things, it depends on the sector you're in or what the industry is. Copper is basically a product, an LME type product. Most people just sell on standard terms and conditions, standard product suite, standard qualities, etc., and it goes into the market, and they'll have contracts. You can actually have a different relationship with customers because customers actually have a world of technical challenges. They have a mountain of technical challenges they're trying to overcome. And most smelters will take 4 to 8 different concentrates and they'll blend them in the front of their plant trying to create a consistent product for their smelter. Because if you don't have consistency in a smelter, all sorts of issues can arise. So they spend a lot of time doing that. If you actually work with your customer, you can actually make yourself in this sector an invaluable piece of that blending mix. So what we've started doing is varying our blend and our concentrate quality to match their input spec. So we change our quality mix depending on the smelter blend need and all the other smelter feeds that they're getting. What that means is we become pretty invaluable. They can rely on us to produce a concentrate that goes into the front of their smelter. So, but to do that, you've got to put yourself in their shoes. You've got to say, what does the customer need? What do they value? What's their challenges? And what can we actually do to satisfy their needs? And it's not the way mining companies typically work. Mining companies typically work, no offence to all the engineers in the room, engineers designing an optimum mine schedule for a resource, and it works back that way. Then the customer will get what the engineer said they'll get. That's typically the way mines work. The way that we're doing it is our marketing sets the context for our engineers and says, this is what I need, go and find me a mine plan that actually builds that. And that is a completely different paradigm because your operators are now responding to a market need, not a resource need. There are trade-offs that have to be made through that process because not every resource can flex. There are trade-offs, but you start from a different mindset. So engineers start with, what does the customer need? I think it's a pretty important paradigm change that is going to become more and more important, especially as customers get more concentrated and as borders widen. So all of this comes back to people. So I started out talking about strategy and people, and our people built the strategy. Everything I have talked about right now has actually come from the people in the business. So none of what I've talked about came from consultants or external agencies or big management consulting firms. All of this came from people inside the business. They had the answers. What they needed is a forum and a way to actually share those answers and get them into somebody who was listening so you could actually formulate strategy with them. And the beauty of this is when you listen to people and build that into your strategy, they will bust their guts to actually deliver it because it was their idea. And if you make something their idea, they will work 10 times harder to make sure it actually works. And that's the discretionary effort that takes good companies to great companies, is that discretionary effort and harnessing that passion. And I like this quote, so I put this up. Too many companies work the other way around. They hire smart people and then spend an awful lot of time directing them. If you do what this guy does, they hire really smart people and then they listen. We're not very good at listening, I don't think, as leaders typically. We spend a lot of time telling and directing and this is what you should do. Flipping the leadership skill set around to actually listen, facilitate, ask questions is something that the mining industry, I think, is really bad at. And it's not bad for bad reasons. It's bad because we've spent a long time putting in regulation to stop people getting killed. So our organisations have become very compliance-based. And those regulations have started at the shop floor and they've filtered up through the business. So we spent a long time putting regulation in place. Some of it needs to be undone. And I'm going to stop. Thank you very much.